Well, hello and welcome to the weekly update here on YouTube. Now, we've got a new opening range, 4186, anything above that, we're bullish, anything below 4164, and we're bearish. We're above the 21 EMA, good job numbers coming out, good employment number coming out on Friday, and also Apple, very large company, has a big weighting within the S&P 500 and the Nasdaq. That had good earnings as well. So good earnings from a big company within the market and good employment results cause the markets to move up, right? So big move up there in the markets, and we can go back to the S&P 500, the best gauge of the overall stock market, and we can see there could be a double bottom happening here, right? See a bounce here off the 50-day moving average. That's normally a bullish pattern. So we could see it move higher from here. We've got a gap to fill up here on the S&P 500, about 4218. So that could see a short-term move higher here. But this week we've got inflation coming out, the CPI number. We talked about how heavily manipulated that is, and we spoke about that last week, but that is coming out this week, and it will certainly move the markets if it's better or worse than expected, right? So we'll be keeping a close eye on that, along with PPI and unemployment claims. Okay, so there's quite a lot going on this week, in particular inflation or CPI. So that's what's going on there. Now we've got to be mindful of that, and also there's a lot of companies reporting earnings. We can see about 170, 180 odd on Monday, 400 on Tuesday, around 270 on Wednesday. If we have a look next week, we can see quite a lot early next week, right? A lot of companies reporting earnings. And then as we go into the week of the 22nd, that's when things start to really peter out as far as earnings season goes, right? Earnings season is coming to an end. So it'll be interesting to see how the market reacts after that. But for right now, it's the CPI, the inflation coming out, and quite a lot of companies, hundreds of companies reporting earnings as well. So CPI and earnings, not a bad week to stay on the sidelines. Now, as far as positions that we are looking at, let's have a look here at this high quality setup. This is on Microsoft. You can see here it had good earnings recently. It's gapped higher, good earnings. What does that show? That shows that a lot of people are participating in the move higher, right? Adding fuel to propel the stock higher. After it's moved up on earnings with good volume, firing it higher, it's then formed a bullish bull flag pattern and broken out of that. So we look at the top of the pole, 308, and the bottom of the pole, 292, it's around $16. So what you'd expect when you see this bull flag, you measure the length of the pole, which is right here. You then project that same length, the $16, the length of the pole, forward, right? Now that it's broken out here of the bull flag, and you're looking for the stock to move to around $326. Okay, so it's a high quality setup, good volume, igniting volume, good bull flag, looking for it to move higher. 326 would be the target. Not a bad idea to sort of stay on the sidelines with unemployment claims and CPI and PPI coming out. But as far as a high quality setup with good edges, what's an edge, Sean? Higher probability of one thing happening over another. That's a pretty good deal, right? So I do like the look of that. What we're going to do is we're going to set up a spread. We're going to sell the 325 for the 16th of June expiry, buy the 320. It's going to cost us $170 per contract, right? So if one contract, 170, 10 contracts, 1700, depending on where you are and what your risk level is, how large your account is, and how much risk you're willing to take. And the potential upside is 330. Now, we're going to set a stop at 70, profit taker at 470. So if our profit taker is triggered, in other words, the stock goes down, Microsoft goes down, we're going to lose $100. If the stock goes up and it hits our profit taker of 470, we're going to make 300. So it's a 3-to-1 asymmetrical reward to risk in our favor, right? Skewed in our favor. So I like that. 3-to-1 on your risk. Very, very good. 3x. So I like that a lot. Good setup, good volume. I like that. But we do have CPI coming out, right? So we've got to be mindful of that. But that is a good quality setup, and we're looking to take that this week. So that's what we're looking at here. Bitcoin not really doing much at the moment, still consolidating around that 28, 29,000. So long as it stays above that support level that I mentioned to you guys. Again, support is a zone, not a specific price. So between around 27,000, 27,500, as long as it stays above that zone, we're still looking okay for Bitcoin to potentially break out and move higher. If it drops below that, we're going probably more likely down to 25. But right now, still holding up well, still looking good. We know the halving's coming out for Bitcoin in early 2024. That's normally a bullish event. So we'll wait and see, right? Wait and see what happens there. But that one is looking pretty good. And we will wait and see what happens. So let's wait and see what happens with CPI this week. Let's have a look at how companies are going with their reporting their earnings, not just their earnings per share and their revenue for the last 3 months, but their forecast. What do they expect going forward? Is it more than the analysts expected or worse? That's going to have a big impact on the stock as well. So earnings and inflation and producer price index and unemployment claims, a lot going on this week, right? But there's a high quality setup if you wanted to take that. I hope you guys enjoyed that, learned something from it. We'll talk to you again next week. All the best and bye for now.